Folks, right now it's earnings season and there's something really big happening in the market. You need to know about it. There's a specific sector that has a major influence on the market. So I want to talk about that sector, talk about its impact on the stock market, and tell you what it means, how to gauge it, and how to make money using it. Before we continue, I want to emphasize that while it's very important to know how all sectors are affecting the market, if you're stressing out over your trading decisions because of it, please stop. This is one of the reasons I use a proprietary indicator that tells us exactly which trades to enter and when to start buying, so we don't have to be slaves to the market moves. Click the button below this video to learn more. Folks, right now it's earnings season, all right? And earnings so far we're in the third week of earnings. This is the biggest week of earnings, and then next Tuesday, Wednesday, and Thursday is going to be the next batch, and then it's going to be a little trickling from then on. But here's the big part. And there's been a lot of confusion because earnings come out in sectors. You have technology, then you have consumer, and then you have banks, and then you have retail. And there's a lot of volatility, but I want to help you make or understand exactly how earnings can help you and how to use them and how to position yourselves with the earnings. Because again, there's a bunch of numbers coming out. Some beat expectations, some don't beat expectations, some meet expectations, some trades below expectations. So I want to tell you what you should be looking at, what you should be focusing on, how to pay attention to this, and what the big focus and the big picture is. So to give you an idea, the biggest sector, the biggest earnings sector is the retail sector. And the retail sector is the last major sector to report earnings. And let me tell you something interesting that a lot of you may not know. You ever see in January, it's called the January effect, where the stock market rallies, where it goes really strong in January. We see this major rally and it starts first week of January and it continues, and it sets the tone for the first quarter. And sometimes it'll even set the course for the next half year. So this is very important, but let me explain to you what all of this has to do with one another. The retail sector is usually the one that causes the January effect, because if you notice, take a look at the last few stocks to report in December. It's usually retail. We have the earnings season. It starts around last week of November and it trickles on to the end of December. And then the result of that is the January effect. And let me explain to you why, and this is really important. A lot of traders don't know, as I mentioned earlier, and I've mentioned this several times, earnings on retail, or let's start the other way around. Retail is responsible for 3/4 of the GDP. 3/4, all right? That's huge, that's massive. So you may see earnings on tech, you may see earnings on healthcare, but when you start seeing retail, that's the major focus, and that's the one to watch, and that's the one that impacts the market the most. And that's usually the last week of earnings, and that's the most important. Even though they don't have the largest market share per se, because you have Apple and Amazon, and those are, Amazon is a retail as well, if you think about it. It started out as tech, but now it's retail. So there's a lot of cross-contamination between consumer and tech and retail, as you can imagine. But again, retail is responsible for 3/4 of the GDP. So they are by far the most influential earnings. Now, what do you pay attention to? What's the big number to look at? Put all that aside. What you want to do is, when you're looking at earnings, what you want to focus is two things. You want to focus on the expectations versus the actuals. Don't worry about what the actual number is. Whatever the actual number is, it's already priced into the stock before the earnings come out. Whatever happens after earnings comes out is the reaction to the difference, all right? The difference And I keep telling this to anybody who will listen. The difference. The difference between the expectation and the actual number. The smaller they are, the smaller the market's going to move. The bigger they are, the bigger the market's going to move. If the actual number is a lot better than the expectations, usually you're going to have a bullish move. If the actual number is a lot worse than expectations, you're usually going to have a much weaker move. So always look at the difference between the actual number and the expectation. And if the actual number is higher, that means the market's going to rally. And again, key takeaways from this video. Retail earnings are by far the most important. They are the biggest moving sector. They are responsible for 3/4 of the GDP, and they set the tone for the January effect for the stock market. Next week and the week after is going to be about earnings. Pay close attention to this sector because it can have very strong ramifications and impact for the rest of the market. Okay, that's a wrap on today's lesson. Don't forget to click the button below to learn more about the groundbreaking indicator that I created. You don't need to get overwhelmed trying to choose from thousands of stocks in the market. This indicator tells you exactly what you should focus on and when the timing is perfect. Check it out now.